Hey guys, so welcome back after a nice 3-day weekend here. I was kind of expecting at least some sort of a decent sized move today, but we ended up just with our standard $3.17 top range. We only put in about 63 mil today, so pretty low volume, pretty low movement. So basically what I'm seeing here is I've been mentioning this big old cup and handle that's been forming now for, really over a month. But really the cup of it has been forming since January 23rd and started here on the 6th. January 5th and started here on the 6th. So I do believe we are finally getting close to a local top. So we have this really nice blue rising wedge right here. Assuming that tomorrow we do not open over 398.6, we will break through this rising wedge support, and that will open downside here. So today what happened is we actually had a double top here at 398.5, which is very bearish. We also reclosed below the daily 200 EMA. This really is technically a triple top if you include wicks, which I do not include wicks, so it is a double top for me. But there is 3 major points of rejection right here. Like I said, this green line is the previous 2022 bear channel resistance level. We did fall short of that also. So with that, I am expecting this to break down tomorrow, and I'm going to be looking for at least a breakdown of 393.5. We very well could touch 390.1. Generally speaking, there's about a 33% retrace of the total move up on a cup and handle, and that would put us right about 390.1 if you include the very bottom of the cup and handle right here. So going forward, I am pretty bearish. However, if we happen to open over 398.5, then I'm going to be looking for 400.6, and then really next major levels are 401.6 and 405.3. Taking a look at futures here, same thing, real nice rising wedge here. It's even steeper on futures. The next thing I'm looking for here is that we rejected here at nicely at 420, which is or 4020, which has been a nice level. We did touch the daily 200 EMA, but we did close over it, which futures, because of the way the contracts work, is a little bit different of a trend. So what I'm going to be looking for here is that unless futures is in the next hour and 10 minutes can go up basically 0.23%, we're going to open below 420 right here, which is going to break through this support line, and that should open the downside. Key level that I'm going to be watching is 39.65. If we get through that, then we could look at 39.40 and maybe even as low as 39.20. However, if we can somehow manage to hold this 40.05 level, which would be about the daily 200 right here, really even down to 39.90, we could look for a retest of key 40.55, if not all the way up to 40.80, and then eventually 40.95. Taking a look at Tesla, Tesla actually looked super strong today amongst the market. So interestingly enough, really Tesla and Nvidia were pretty much the only 2 huge green stocks for the day. Amazon was down, Google was down, Meta was down, Microsoft and Apple were pretty much flat, slightly green. So kind of curious on that, see what happens with that. I know Tesla has earnings coming up here on the 25th, so we could be seeing a small rally into earnings. But one of the biggest things I'm watching here is that we broke through this bear channel resistance. This one dates all the way back to the September 21st sell-off. So this is the start of the sell-off. Now, mind you, we have had 2 fake bounces. So we had the same thing. We had a channel here that we broke through, and then we obviously started next leg down. We did the same thing back here. So there is potential that this is just a fake local breakout, and we're going to put a top in here and come down. One of the biggest things I want to point out is the daily 20 EMA, which is this blue line. I know it's kind of hard to see because I'm zoomed out here. I'm trying to show you guys as much as I can at one time here. Every time we have broken over the 20 EMA or touched the 20 EMA, we have rejected and we have started the next leg down. If you believe that Tesla is still in a bear trend and overall markets are still in a bear trend, more likely than not, this is the top. I do see on a zoomed in case here, I do see a potential to test 136 area, but I really don't think we're going to go much further than that. The only thing that would really change my mind is if we close every candle the rest of the week over the daily 8 EMA, and we continue to rally into earnings and get a good earnings next. It's on Wednesday night they report. I would believe in a bigger rally. However, I'm still not convinced. I more likely than not am going to look for the turn down to start, and I will be eyeing roughly that 110 level. Taking a look at the VIX here, we're still in our downtrend. We do have a bit of a falling wedge formed here now. We had a really nice green open on the VIX, which was about a 3 to 4% open. However, SPY also opened green. And then interestingly enough, throughout the day, pretty much the VIX just sold off. Those numbers are really off. So I know we noticed this over the weekend. Here on TradingView, it shows that the VIX actually put in a 5.51% day. However, as you can see, it was really a negative 0.77% day. For some reason, the daily number on the VIX this weekend did move. So for yesterday, Monday when the markets was closed, it did move. However, I didn't actually see any trading on it. So that was kind of interesting. The VIX, I don't think, is usually open when market's not open. So I'm not really sure what happened with that. But anyways, basically we still sold off throughout the day though. And we closed down here below 19.6, 19.7 again. So realistically, we're kind of just looking to see if we're going to put in some more downtrend here. And I mean, honestly, until we take back the daily 8 EMA, it is hard to want to be bearish overall in the markets, because this is saying that we are bullish on the markets the further we unwind here. Something to keep in mind, though, is that really what the VIX measures is volatility. And if there's not a lot of volatility, which there surely is not, and people are not really hedging bearishly for right now, then you're not going to have the VIX continuously going up. In most neutral to bull markets, the VIX doesn't have massive spikes and the VIX isn't running massively up. So we may have days where the VIX unwinds and SPY drops too. So that's something to keep in mind, that really until people start putting heavily their hedges back on, which might not happen until FOMC or CPI, if they even happen, or something with recessions happen, we could still continue to see the VIX sell off, and we could still see some retracements on SPY. So just keep that in mind, that the VIX is definitely not a perfect correlation. And even in a perfect bear or bull market, it's not going to always perfectly correlate. So, all right, I hope you guys had a good day trading today, and I'll see you guys tomorrow. Thank you for tuning into this video. Don't forget to subscribe and like to stay updated with my most recent videos. There is a lifetime Discord link there for you guys. If that one doesn't link, just go ahead and send me a message and I'll get you guys a new one. Some of the benefits of the Discord is there's a live trading, live intraday commentary. I also do an updated pre-market with support and resistance levels every day. You can follow me on YouTube, Twitter, Instagram, TikTok, and Reddit.